Right. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalamu ala rasulih al-Kareem. Nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Welcome everyone to this webinar of the 2023 ISDB annual meetings. Today's webinar is on Sukuk market outlook and investor appetite. Thank you everyone for joining us from around the globe. May I begin the event now with the invitation to His Excellency Dr. Zamir Iqbal, the Vice President of Finance and CFO of the Islamic Development Bank, to kindly deliver the keynote address. Dr. Zamir.
Thank you so much, Brother Mohsin. Bismillah ar-Rahman ar-Rahim. Distinguished guests, expert panelists, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuhu. And a very good morning, afternoon, or evening to everyone joining us around the world for this very important webinar. It's indeed my pleasure to be here with you to learn from the expert panelists who all bring very unique perspective about the Sukuk market. As you are aware, Sukuk is a major fixed income instrument in Islamic finance, whereby the stream of the cash flows are generated similar to conventional bonds, but with the additional layer of Sharia compliance. In terms of operations, Sukuk are no different. They are processed like the other bonds, and investors do not have to make any system or accounting or any other changes to clear through the international central clearing houses. So in that sense, Sukuk could be considered as any other plain vanilla bond. At least I'm talking about the ISDB Sukuk. I'm very pleased that estimates are indicating that Sukuk market will be crossing about $1 trillion mark in the next 5 years. I recall it was not just, it seems yesterday when Sukuk was introduced, and at that time the whole Islamic finance market was $1 trillion, had not reached $1 trillion, but alhamdulillah, now we are at a stage where the Sukuk market is close to crossing of $1 trillion, alhamdulillah. I believe in this respect, this webinar is very timely and a very good opportunity to share the latest trends and insights on the aspects such as whether these Sukuk is a plain vanilla, labeled, digital, non-digital, and so forth, sustainability, non-sustainability. So it is very important that we share this thing with our member countries for them to benefit. The growth in the market has been driven by increased demand from investors seeking alternative investment options, such as well as the growing Islamic finance industry. I am very pleased to see that we'll be listening from very renowned expert, Dr. Muhammad Damar from Standard & Poor's Ratings, and others whose participation is very much appreciated. We as Islamic Development Bank, as a supranational, we continue to play a major role in the Sukuk market with our frequent issuances in both public and private placement formats. So since 2009, we have undertaken more than 60 Sukuk issuances worth about $42 billion. Out of this, roughly $22 billion is currently outstanding in the capital market. Of course, with the formulation of Sustainable Development Goals and their global acceptance came the need to intensify our development efforts with a sharper focus on specific focus. In the fixed income market, this led us to creating our flagship Sustainable Finance Framework back in November 2019. The framework was created in line with the global green bond principles, the social bond principles, and the sustainability bond guidelines that were published by the International Capital Markets, or ICMA. This strong framework, which was reviewed by external second-party opinion providers, laid the foundation for the IDB to issue Green Sukuk and Sustainability Sukuk and raised more green, climate related, and sustainability linked resources from the capital markets. Under this framework, ISDB has issued more than 5 billion in both green and sustainability scoop to date. Our first green was denominated in euro and raised 1 billion euro back in November 2019. Our debut Sukuk raised about 1.5 billion in June 2020 proceeds exclusively for COVID-19 related interventions in our member countries. Across these issues, we are very pleased to see new investors' interest, especially from those who are driven by ESG investing and socially responsible investments. Now, unlocking this new investor base complemented our mission of raising more awareness of Sukuk as a sustainable finance instrument that should be scaled up further to achieve the SDGs. Another factor driving investor appetite for Sukuk is the attractive risk return profile. Due to their underlying asset-based structure, Sukuk typically offers competitive yield and the diversification which have been attractive in a very volatile market environment. In this context, I'm very thankful to Mr. Ayasami Abdul Wahab, who's joining us from the Central Bank of Algeria today to share their perspective as a major Sukuk investor. Let me take a moment here to thank the central banks of our member countries for their support and participation in our Sukuk issuance regularly. The increasing awareness and the acceptance of Sharia compliant instruments resulted in the addition of non-Islamic investors as an investor base too. The diversification and attractive risk return profile, as mentioned earlier, are the key elements that bring such investors in the order book of the issuer. From the market side and to learn how issuers are viewing the Sukuk market, we look forward to hear from Mr. Kareem Al Zain, who is joining us from Societe Generale, and I thank him as well for participating here in this event today. I hope our audience derives the maximum benefit from these expert panelists and take the key lessons from them for implementation in their own jurisdiction, inshallah. As always, ISDB stands ready to support the further development and growth of the Sukuk market. As part of our effort to expand awareness about Sukuk in global capital markets, ISDB has been working closely with International Capital Markets Association to ensure that Sukuk asset class is well integrated in the global capital markets. From ISDB's perspective, our new realigned strategy from 2023 to 25, that strategy was designed in a post-COVID environment and also followed by the food insecurity issue. That strategy realized that there is increasing demand for infrastructure financing in our member countries who are gearing for green economic growth. In addition, Islamic finance is being explored by many non-Muslim countries as a means of diversification as well as offering solutions to their increasing Muslim population. These are the factors that we expect will drive the further future growth of Sukuk market. As I conclude, let me reiterate that as part of our comprehensive mandate, ISDB is committed to providing more depth to Sukuk market with our top quality AAA rated benchmark size issuance every year. This also boosts liquidity in the market as we continue to encourage other issuers to utilize Sukuk instrument for their funding needs as well. As more green Sukuk and sustainability Sukuk issuances, ISDB will continue to pave the path for the industry to innovate under existing Sukuk format, and we hope that we will be seeing more innovative Sukuk structures to meet the demand from our investors as well as the needs of our financiers. The goal is ultimately scale up these sustainable finance instruments, plug the huge gap in the funding gap for the SDGs, and further cement the position of Sukuk as a key element on the road to achieving SDGs, inshallah. With that, I thank you for your kind attention and look forward to an insightful panel discussion. Walaikum assalam wa rahmatullahi wa barakatuh.
So, thank you very much, Dr. Zamir, for enlightening us with what ISDB has been doing in the Sukuk space and the potentialities of this segment moving forward for our member countries as well as financial institutions in the region. Without further ado, we now move on to the panel discussion where we have the experts from a rating agency, a bank, global bank, as well as a central bank, which is a major investor in Sukuk across in the Sukuk market. We have joining us Dr. Muhammad Damak, who is a Senior Director of Financial Institutions Ratings at Standard & Poor's Global Ratings. He's also the Global Head of Islamic Finance in S&P. He covers financial institutions in the Middle East and Africa region. He also leads the global team of Islamic finance analysts at S&P. Welcome, Dr. Damak. From the bank's side, we have Mr. Karim Al-Zain, who is the head of Societe Generale's Meta DCM team with over 15 years of investment banking experience. Karim has been with Societe Generale since November 2014 and has performed roles across FI coverage and DCM in the Middle East, Turkey, and Africa markets. Prior to joining SocGen, Karim was at Credit Suisse London for 7 years, where he also led the Meta DCM team. From the investor side, we have Mr. Essani Abdul Wahab, who is the Deputy Director at the Central Bank of Algeria, joining us from Algiers. Many thanks for joining us here, Brother Essani and Brother Karim. Your moderator today will be Brother Muhammad Sharaf, who is the Treasurer of the Islamic Development Bank. He oversees the bank's overall treasury and capital market activities. Prior to joining ISDB, Brother Muhammad was the head of structured finance at Crédit Agricole Bank, covering Egypt. And before that, he spent 12 years occupying several managerial roles with the Arab African International Bank. Now, for our audience, please do not hesitate to post your questions, comments, and feedback through the Q&A option in the Zoom app. And Brother Sharaf, the floor is yours.
Thank you, Brother Mohsen. Again, thank you to Dr. Zamir for inviting us with some of the major, I would say, themes that will be discussed today. I want also to thank the panelists. I want to thank Dr. Muhammad for joining us. I know it's a very tight time for him, but he was able to manage it. Thank you, Karim, for giving the time. And thank you, Mr. Aithani, for giving the time. Actually, today, I would say panel would be mainly focused on the major themes that, maybe His Excellency, the Vice President have talked about. So let's go directly to the main topics and discuss it. So I would say, Dr. Muhammad, this is something that we have been talking a lot about it, mainly about the Sukuk market outlook. I know that S&P probably last month have issued a report, about 23-24, which is, beyond core. What do you think, the latest assessment of the rest of 2023 and 2024 in terms of the growth of the, of the Sukuk market? And where do you see the challenges, especially the challenges related to the limited supply sometimes that a lot of the, banks sometimes comes and complain about, and also central banks. So what is your perspective on that?
Sure. Thank you very much for having me first, and good afternoon, good morning to all of you. Let me start by throwing in some numbers. The volume of issuance in 2022 is down compared with 2021. 2022 saw almost $156 billion of Sukuk issuance versus $170 billion in 2021. And this trend has continued in the first quarter of 2023. In the first quarter of 2023, we saw almost $31 billion of issuance compared with almost 39 in the same period last year. Why is that? Three reasons. The first one is the less supportive market condition. I think because of inflation, central banks around the world have been increasing their interest rate. We live in a region where the interest rate are dependent on what the Fed is doing because of the peg between the GCC local currencies and the US dollar. We expect the Fed rate to peak in May at around 5 to 5.15% and to stay around 4% with the higher for longer approach of the Fed is taking to tackle the inflation. So this is the first reason, less supportive market condition. Second reason is that the issuers in core markets would be the GCC, Malaysia, Turkey. So those would be the main markets where we see a development of the Islamic finance industry. And now issuers in these markets have lower financing needs. And that's because of the higher oil price and the absence of major investment cycle in some of them. With the exception of Saudi Arabia. In Saudi, we see a lot of opportunities with the implementation of Vision 2030, knowing that the banking system has been experiencing some pressure on the liquidity side, and that in any case, the banking system on its own won't be able to finance all the projects. So we see some opportunities coming from Saudi Arabia. We see also some issuers that have been under a lot of pressure. The example that comes to mind is Egypt or Turkey that have been tapping the Sukuk market in order to open all the possibilities or in order to implement the strategy to mobilize all the available resources to them. The third reason behind the slowdown is a long-standing reason. It's the weakness related to the Sukuk itself, such as the complexity and the time needed to issue a Sukuk, which is deterring some issuers' appetite. We saw that in the past with some African countries that couldn't make it to the finish line because of the complexity related to Sukuk issue, and some of them were helped by the IDB group in order to be able to make it to the finish line. But frankly speaking, there are some uncertainty on how regulation will evolve, and whether this or whether we would end up in a situation where the Sukuk as an instrument would change. We'll see a complete change in nature in a sense that it would become a quasi-equity instrument versus a pure fixed income instrument today. And this is what some of the scholars are trying to push the market where. Now, there are some positive news. One of them is that the Sukuk issuance will continue to exceed the maturities this year, which means that the market will continue to grow. I think Dr. Zamir talked about $1 trillion. At the end of 2022, the market, the volume of outstanding Sukuk is already at $872 billion, and we're getting very close to the $1 trillion mark. So there will be more issuance than maturities this year. There will be a lot of issuance in local currency where the market remains skewed. Second opportunity is related to the digitalization. And I think here digitalization can resolve multiple challenges that the industry has been facing, including reducing the amount of time necessary to issue Sukuk, displacing some of the intermediaries, but also responding to the problem of standardization of legal documents, because if we will move to a world where the process of issuing Sukuk would become logging into a platform and selecting legal documents, that would assume that you have already standard legal documents in place. Third opportunity where I think the IDB has been active is on the sustainability side, which is again related to the natural alignment between Islamic finance and sustainability. Again, the strategy of core countries to move away from fossil energy and to increase the contribution of green economy into their overall economy, which would create some opportunities for the Sukuk market and also for the bank's financing.
Thank you, Dr. Mohammed. I think you've touched the very important points. Coming out from the challenges up to the opportunities, and probably we'll come back to the digitalization in more, I would say, elaborative way on this panel as a disruption of what we're seeing on the market. But let me take your challenges. You talked about the less supportive market condition. You talked about how the supply or the financing needs of some of the issuers are being affected. You talked about also the complexity of the structures. So let me throw this to Mr. Karim Zain before getting Brother Isani view as an investor, but I'll push this to Karim directly. Karim, do you share the same views of as a GLM and a joint trade arranger for many of the Sukuks on the region? Do you share the same views of Dr. Mohammed, especially about the challenges? And how do you see the Sukuk demand? Because normally you work on those markets and you understand, about how investors are demanding the instrument itself.
No, absolutely. Thank you so much, Brother Sharaf, and salam alaikum to everyone. And thank you, Dr. Damak. From my perspective, I completely echo what Dr. Damak is saying. I think it's a very interesting environment that we're in now. Over the past couple of years, really, we've seen, and I look at things more from an international side. So the numbers that have been talked about the trillion, we're seeing in the international side, it's somewhat lower. So the majority is local currency. So we have seen, for example, issuance peaking in 2021, where we saw about 30 billion coming from the Sukuk market, and we did see that drop to below $20 billion in 2022, and to date we're about $10 billion worth of Sukuk in 2023. So and from that perspective, I think looking at the appetite that we're seeing from the investor base, the appetite is really there. And it's there in strength. We've seen, over the course of this year, the deals that have come in the Sukuk space have come across a variety of different credit ratings. If you look, for example, you've had your very successful transaction for a AAA rated multilateral development bank, and we go down all the way to single B minus rated sovereigns. We have double B minus rated real estate developers in the UAE. We have government-related entities and banks in the single A rated sector that have all come to the market and done extremely well oversubscribed transactions. So we know that the demand is there. And when you look at the different types of investors, I would say you probably have three different types of investors that are playing in the Sukuk market at the moment. You have the captive Islamic investors, and these are the investors that cannot buy anything other than Sukuk when they are looking at the fixed income space. And for the most part, what we've seen is that with commodity prices going up, we've seen the liquidity becoming more rampant, and we do continue to see, as has been pointed out, a dearth of supply. So there's always more demand than there is supply in the international market, and the captive investor base basically supports this. Then you have the conventional investors that are being more and more active in the Sukuk market, and these are primarily either regional, Asian, Middle Eastern investors, or there are also some of the broader global investors that are more active in emerging markets. And the reason why I say that is that, for example, in 2016, Sukuk became index eligible with the emerging market bond index, but it isn't index eligible for a lot of the other global indices. And so part of that is because EM investors are seeing a lot of Sukuk issuance coming out of the Middle East, coming out. They cannot ignore it anymore, and it became a place that they're actively putting their cash to work. And then you have the third part is effectively conventional bond investors that are maybe a little bit less keen on Sukuk, and it's basically due to less exposure. So these are the guys that have, that track the indices that do not track Sukuk. These are the guys that buy US IG credit. These are the guys that buy European IG credit, and they are, have not seen too much in the way of a critical mass in Sukuk in order to really have to focus on it yet. And I think it's a matter of time and it's a matter of exposure. When you look at the challenges, I think they're exactly those that Dr. Damak pointed out. I think, and the structural aspect, I'm hoping, the uncertainty there, and when you look at the different policies and the standards that are coming out, and different regulators applying them differently, the hope is that at least with IOFI, pushing a standard out, that with time, we all sort of end up focusing toward that standard. Maybe there will be some teething issues at the start, but effectively, I think the end goal is a positive one, and it might not be very short to get there, but we're heading in the right direction.
Thank you, Karim. So, probably you're confirming, the outlook, that Dr. Mohammed have just spoken. But let me take this from another angle, from the investor side angle. And I think you talked about the three types of investors coming out from the captive to the conventional, up to the, the conventional, who's not that I was focused on Sukuk, but, opportunistic, I would say. Now, I'll move to Brother Aisani. Brother Aisani, this is the time. What was the experience of Central Bank of of Algeria investing in Sukuk? And do you agree with the fact that the supply is limited that we have been talking about right now? And how, in your views, this can be expanded further?
Hello, good afternoon, everybody. Thank you so much that we asked the opportunity to participate in this webinar.
Mr. Hassani, if you can raise your voice a bit, I'm sorry, but just to make sure that everyone is listening to you.
Okay. So, thank you so much for the opportunity to participate in this webinar. Just make an overview about our main activities in Central Bank. But the Central Bank of Nigeria managing foreign reserve and foreign reserve, and we have now long experience in this kind of Islamic bonds. But recently we find it good opportunities to us in turn to diversify our portfolio in different currencies and from dollar, euro, and sterling. And a couple of years ago, we had this kind of implement to our portfolio support. One will have the chance to participate inside primary markets, so we're going to detail and take part. And to go into review, we find this kind of one very attractive and getting a couple of base points over the yield curve, and it makes sense to our investments. The dollar or euro. So this experience, so we are very comfortable in terms of diversify the portfolio, and we look for another instrument step by step. So from from the term of the front of the curve. And so we are looking at what exchange experience to understand the person, like the Malaysians or other countries that have a long experience in this investment. So we are very new in this change, and step by step we modify in the meantime modify our legal and framework so we are very happy and involved in this management.
Thank you, Mr. Hassani. Maybe just to make sure that for whoever, the sound might be a bit. Let me just share some of the key points that you have said. So, Central Bank of Algeria have started to invest, in Sukuk probably from a short period of time. They were talking about 2-3 years. Part of it is diversification. So I think this is something that Mr. Hassani have just highlighted now. About diversification. The experience have been rewarding, and we're very happy with that. That more and more central bank consider Sukuk among their eligible instruments for managing the reserves. I think the currency wise also Mr. Hassani have talked about the currency, and he've also talked about what we call the reverse linkage here in IDV, which is the experience of other member countries or markets. It's like the Malaysian market. He noted the Malaysian market, and maybe some kind of experience are being taken from the Malaysian market in terms of the regulation and the frameworks that can be done on Algeria. Now, I think he raised very important point, which is the regulation and the frameworks, and we'll come to it later. But let me come back to one of the themes that we've also always talked about in IDB, but also Dr. Zamir have just highlighted, which is the sustainable and ESG investing. And I'll go back to Dr. Muhammad. Dr. Muhammad, what do you think, the Islamic ESG, have done on the last Islamic ESG, or what we call ESG investing, in terms of issuances on the last, maybe 5 years or 3 years, especially on the growth potential in the GCC? We've just seen the Saudi electricity, green Sukuk coming out probably, and it was very highly oversubscribed. So how do you see this, and how do you see that this can contribute to international investors is very keen about this into the Sukuk market?
Right, excellent question. Thank you very much. How much did the industry did in the past few years? My short answer to that is not enough. It did a lot, to be honest, because when you look at the volume of issuance of sustainability-linked Sukuk last year, it was around $10 billion. This year, since the beginning of the year, we already saw $4 billion being printed, and we expect to see more. But I'm saying not enough because there's a natural alignment between Islamic finance and sustainability consideration. If you look at the 5 core principles of Islamic finance and you put sustainability side by side, you can see natural connection between the two. And also the industry is concentrated in oil exporting countries. Many of these countries have already made commitment to achieve net zero or made commitment to diversify their economy and to increase the contribution of the, for example, in the UAE, there's a significant effort being deployed in order to improve the energy mix of the country, and that all could result in some opportunities created for the Sukuk market. And it's not just the Sukuk market; it's also the banking sector, because we've seen many of the banks in the GCC coming out with their sustainability agenda and with their strategies to develop their offering, from green mortgages to the financing of electric vehicles, et cetera, et cetera. So the opportunities are really significant. And we think that this will be a theme that will drive forward the growth of the industry in the next few years. Another reason why the issuers are doing it, it's because investors are asking for that. And they're doing it to remain on the radar of the investors. If you look at the large asset management companies and the top investors in the world, which, by the way, are also investors in the Sukuk market, even though for some of them, they don't have any Sharia-related mandate, but they come to the Sukuk market because of the fixed income nature of the instrument, and which is something that we could lose if the Sukuk becomes an equity-like instrument going forward. And for those investors, if you look at many of the top investors, they've made public commitments to say, if it's not sustainable, we will no longer invest in that. So by creating and printing these green and sustainability-linked sukuk, the issuers are also responding to the investors' demand from that perspective.
Thank you, Dr. Muhammad. And I think this is really goes to take me to the next question, which is to Karim Zain. And actually, Dr. Muhammad have highlighted that some of those, I would say, impact investors, I would say, or who's looking for the sustainable, angle in their portfolios. As a GLM and an international GLM, Karim, how do you see GLMs can help to promote this, into new breed of investors to the Sukuk? And this is coming out from mainly many angles, sustainability, but even, as we said, category number 2, which is, not captive investors, but conventional investors, but who's interested to see the sustainability angle on that. And, and how the assistance that the GLMs can offer into this process.
Thanks for that. So it's going to sound like a simple answer, but it's to do more, to issue more, and to increase the exposure of these investors to the Sukuk market. I think, and that's really the key element here, is that when there is more issuance, investors become the more focused on the sector and more focused on the space, and have to work with it, have to take it seriously. I think that's really the core driver. The way that what we do on a regular basis is we take the issuers to meet investors. We help the issuers put together these frameworks and put together these their strategies on ESG, and try to go and speak to the investors and guide them as to what they're looking to do in this space. Because one of the key elements on the ESG side is effectively having a credible story that you're able to share with the investors. Doing a green bond just to do a green bond doesn't make a difference. If you're not aligned, if you're an oil and gas issuer that has no transition plan and is very focused on that, you cannot issue a green bond, right, or a green sukuk. And therefore to grow this market is to, one, have a proper alignment of the nature of your business and these issuances, and effectively then to communicate on this alignment and get investors to understand and see that yes, it is aligned. Because one of the big issues we have, unfortunately, especially for the region that I operate, is that there's an unfortunate bias against the region. While and the region being, call it Middle East, Turkey, Africa, in terms of ESG, while a lot is being done, and you can see it on a day-to-day basis when you're on the ground, you still have a lot of international investors that are not buying it. And the reason, I think, is that they're not buying is that not enough is being done in terms of communication and in terms of engagement to get them to accept that this is real and this is happening. And so I think that's a very important thing. So continuing to assist borrowers to get their message out, and then two is also in terms of just highlighting exactly what you said is about the alignment of the ESG fundamentals with the Islamic principles, right? You have the 3P principles on Islamic finance, the triple bottom line, which is planet, people, and profit with a purpose, which is almost fully aligned with the content of ESG. And so I would say those are the key elements, I would say, in terms of how we can help.
Thank you, Karim. Thank you. I'll take from this point and move back to Brother Asani, who is the investor here. And I would say it's a double question in one question. First of all, does it really matter for you when you're buying, if this is a sustainable sukuk versus, I would say a plain vanilla sukuk without the thematic impact? This is the question number one for you. Number two, how do you see the sukuk coming into play into the fixed income global landscape? And I'm talking about conventional plus sukuk, So my question is, it's two questions in one, does it really matter when you see the sustainability angle when you're buying the sukuk? I think you're muted. Yes.
Yeah. Okay. Thank you so much for this question. Investment in Sukuk, so there is a high recommendation for the government to encourage this kind of this instrument. Well, but we find it's decreased day by day, and the government recommended to make percentage 5-10% for the whole amount but how this means it's dedicated for this kind of investment. So really we found it very effective and getting the wide acceptance for investors and for now. So we more concentrate for bonds.
Thank you. This is maybe a vote of confidence that Sukuk is coming into play with the reserve managers, coming out competing with the bonds, which is something that I think all of us like. Now, I'll take from your answer, Brother Asani, and move back to Brother Damak. You've talked about the opportunities, and one of the key that we are seeing is the disruption that is happening coming out from the voices coming out from digitalization. And and I think this is something that we're all interested and maybe to explain to our audience today, about what is being talking around, in some I would say voices talking about the digitalization of the issuances itself. So maybe Dr. Muhammad, why do you see this as an opportunity that digital comes into play? And maybe just while you're doing your answer, maybe just give a background to some of our audience who ask, what is a digital sukuk? Because some people say it's coming out for the ICT communication, but but I will leave the answer for you.
Absolutely. Thank you very much. What is a digital sukuk? It's a tokenized form of sukuk that is listed in either a digital stock exchange like the SGX in Singapore or the SDX in Switzerland, or that is simply being printed in the blockchain of an intermediary using platforms such as some of the large banks like Societe Generale or like Goldman Sachs or HSBC or etc. So all these players have came with some sort of offering in order to avoid being disrupted by the wave of digitalization and by the decentralized finance. Now, why does it matter? So take an example of a country that has been informed about the opportunities offered by the sukuk market to diversify investor base. Sometimes you can price your sukuk lower than you can price a conventional bond because the demand would be significant. But this country has never issued a sukuk in the past. Now, the process for the country to issue sukuk can be painful and can take a lot of time. The UK, for example, is the leading place of Islamic finance in Europe. They've announced their sukuk in 2007, and they ended up hitting the market only in 2014. And this is the leading place in Islamic finance in Europe. So many countries and many corporate issuers have looked at the sukuk market and tried to tap the market, but then they decided to walk away because it was too much of a pain for them versus picking up the phone and calling your investment banker and printing a bond for the same amount. So digitalization can change that in a sense that instead of going through the painful process of identifying an asset, speaking with your investment bankers and lawyers, coming up with a structure, and then eventually ended up hitting the market. And you need to adjust your laws and regulation before to make sure that they're friendly for that. If it's digital, you just have to log in to a platform, select standard legal documents. And that's why I think digitalization can help achieve a double objective of making the issuance process easier, but also standardizing the legal documents, because you need standard legal documents embedded into the different platforms. So take the standard legal document, embed your underlying asset, and then you have a bunch of investors that are connected to the platform that get a notification that the country XYZ or the corporate XYZ is printing a sukuk for 500 billion. They start to build the book, and then the whole thing is closed in a few hours or a few days, and the digital sukuk is printed in the platform. Now, for the time being, we've seen that happening more on the conventional side with digital bonds. We've seen many digital bonds since the beginning of the year. And again, this is also underpinned by the advancement that are made by some of the intermediaries in coming up with their platforms. We haven't seen yet digital sukuk being issued, but we know that there are some players in the GCC that are trying to develop and offer to digitalize the sukuk market. And why? And again, besides the fact of reducing the time and the pain and the cost attached to issuing the sukuk, it can also open the door to smaller issuers, because today, in order to be able to cover the costs related to sukuk issuance, typically issuers have to go for a benchmark size of issuance, but not every issuer needs a benchmark size of issuance. So some of them need to print 10, 20, $30 million, but they can't do it today because it's too expensive for them to cover for the cost of issuing the sukuk. Now, with digitalization, that could be helpful, and they could eventually make it to the finish line. Similarly, for the investors, today, if you look at some of the prospectuses of sukuk, the minimum entry ticket is typically in the $100,000 and more. But as a small investor, I might be interested in taking a position on the sukuk market. So that's why in the conventional space, we're seeing some companies that are buying the bonds and creating tokens that they're selling bits by bits to their small investors. And by doing that, they open the market to a whole new class of investor. So long story short, we think that digitalization would be one of the main opportunities for the market going forward. There are still some hurdles that needs to be dealt with. One of them is the lack of regulation. For example, when you open the market to small investors, you want to protect them in the first place and make sure that they understand what type of instrument they're getting into. So the lack of regulation on the digital sukuk is one of the main challenges that the regulators will have to deal with. And also, there is a lack of, a bridge between the digital and the real world. Because today, you can print digital bonds or digital sukuk, but cash doesn't go on the blockchain because it has no way of going on the blockchain in the absence of either a stable coin that would be considered credible enough to be used as an underlying, I want to say currency, to the issuance of the Sukuk, or a central bank digital currency that can be used for that perspective. But today what is being done is, for the digital bonds, for example, is that the bond is printed in a tokenized way, but cash is going through the normal traditional finance rails. Now, if we were to have a central bank digital currency or a stable coin that would be credible enough to achieve that perspective, that purpose, I think that could help the digitalization of the market going forward.
Very interesting subject, Dr. Muhammad, but let me go to Karim, because Karim, without any kind of publicity, but you are one of the banks that, as Dr. Muhammad have highlighted, that you were maybe afraid of disruption, maybe, but this is something that is, not to be, alluded here, but maybe you already have taken as a GLM, some steps toward this. First of all, what do you think about that? Is it going in the right direction? I'm talking here about Islamic Sukuk, not mainly the conventional side of it. And how do you see this? Let me just summarize what Dr. Muhammad, he talked about the convenience. He talked about, that this would be cost-wise, much suitor, for, I would say, smaller investors that can get more, demand into the Sukuk landscape. Now, from your side as an GLM, how do you see this coming into play?
I think that's very valid, and all the points are valid. I think from our perspective, yes, maybe my job will be obsolete in a couple of years, with the digital bonds really taking off. I think we're still not there, or digital Sukuk. We're still not there. It still needs a little bit of time. Societe Generale has been at the forefront, though, of digital bonds. We have an entity called SG Forge, and it's a fully integrated, regulated subsidiary of Societe Generale that's fully dedicated to digital assets. And we've done a couple of these digital bonds, or a few of them, including a couple for the European Investment Bank. So what I would say is that, we've had this entity set up since 2019. We've done a couple of these transactions since 2021, but it's still pretty nascent in terms of a market. So, we've seen, all in all, I would say about 10 such transactions in the digital bond space. We have on our platform, we've onboarded about 20 investors. These investors are the typical names that you would see buying the bonds, but they're onboarded onto the platform. So when we are issuing these digital bonds, they will go to, they have access to these 20 investors. So the idea is to grow this platform both ways, to grow from the borrower side, but also to grow on the investor side. And to what Dr. Damak had highlighted is that there are different ways to do it, and for us it is using our platform, which uses the Ethereum blockchain. But effectively, the idea is that through our platform, it's more of a trusted, if you want, platform, in the sense that you have all the typical KYC regulations that you have for any bank and financial institution in terms of onboarding. So from a perspective of a lot of the noise that we hear on crypto space, this is a sort of safe environment to develop this further. So we do hope to start seeing movement into the Sukuk space. I've had a conversation with SG Forge prior to this webinar, and they've indicated that everything is in place for digital Sukuks to be the natural next step. I think a few things, even in this, if you want, test environment that we can point to, is that in the current environment, there's no real secondary market yet There's been a couple of test trades on the digital bond side, but I wouldn't say that it's primarily buy and hold, where for Sukuk market it's pretty much always the case, with at least with a lot of the Islamic banks just maintaining and holding a lot of the Sukuks on their balance sheet. So and then there's another factor that's very interesting, and applicable, I would say, for Sukuk on the digital aspect, is the trustability. So what do I mean by trustability is, for example, when we're looking at green digital bonds, one of the things that the blockchain allows for is to track the use of proceeds and basically say, okay, this X building is linked to X green bond. And considering the asset-based nature of Sukuk, you will be able to say, oh, this asset is, or this expenditure goes to this bond, and investors can track it pretty clearly. So all in all, very hopeful and positive. I think we will see more and more breakthroughs given the regulation in Europe. We do expect 2024 to be a year where we will start seeing a lot more in terms of secondary liquidity, which I think will make that 20 investors that I said we have onboarded, quickly balloon from there, and that will, make the market even more exciting for any potential issuer.
Thank you, Karim. I think we've covered this digitalization. As I said, we're seeing some movement, but maybe it will take some time. But we've sort of brought it here on the webinar just to shed the light to it and to continue focusing on it. Let me move back to Brother Asani, and we move out of this to to your views about the challenges on the Sukuk market. And your views comes differently because you are one we started to invest in Sukuk, and on the last 2 years you have been there. Central Bank of Algeria have been doing great efforts, on this regard. Now, if we summarize, the challenges, that you see on the Sukuk market, and this is something that we all issuers trying to try to manage it. And how do you see that reserve manager continue to support, the Sukuk market, on fundamentals as compared to the bond market?
Yeah. Thank you so much for the question. Really important. Well, our philosophy in managing our reserve, foreign reserve. So we find Sukuk bonds really give us good opportunity and alternative. It's like as alternative products that gives good return, first of all, and as we recommended, very conservative, this kind of bonds, especially after the crisis joining the trade. So most often this we shifted to this kind of investment because it's based for some underlying assets and must generate a specification and non-property. So the challenge are always investors like Central Bank looking for new products that have more liquid, that is liquidity, ensure liquidity in the market, and very strong, there is a strength investment. Right now, we are in the beginning of this experience, but like to add other kind of Sukuk assembly bonds. So big challenge, and we are very happy to learn and bring other experience for those countries that have long experience, as mentioned before, Indonesia and Singapore and other countries as well. We are always learning, and we are new instruments to our portfolio in terms to enhance, in one hand, to enhance our returns, and in the meantime, making sense. There is making sense. And maybe I have the third key point, encourage as we belong to Muslims society, and we encourage this this bond, and making very wide in our policy.
Thank you, brother. I think maybe just to make sure that some of our audience, most the sound might not be. So, brother, I talked about, the competitive advantage of Sukuk having an underlying assets. He talked about, what he think is the challenges that he needs strong issuers. He talks about liquidity, and that the issue in its sense needs to make sense in terms of, adjusted returns. So those are mainly what investors are looking at, and probably the size of the market itself, So this is something probably I'll take the underlying assets, because now we'll move to the Q&A session. We're getting live questions from our audience, which have been increasing. I'll give you the first question, and maybe I've seen a lot of people talking about the impacts on the financial market and for these weeks. But Brother Abu Zar has asked, and maybe this is for Dr. Damak, about your thoughts how the decision of ECB to convert Tier 1 capital instrument to equity will affect investor appetite as well the market issuance. Do you think Tier 1 Sukuk will be longer viable? What do you think is the future of the current AT1 Sukuk on the market?
Right. I think Tier 1 instrument are certainly instruments that are not for the faint-hearted. And I think in the GCC, at S&P Global Rating, we have made the decision to rate this instrument from the standalone creditworthiness of the banks, despite the fact that we consider 4 out of the 6 countries as highly supportive toward their financial institutions, meaning that we said clearly that we don't expect support from the government to accrue to this instrument. And the reason for that is very simple. This is what the legal documents say. If you read the legal documents, you would see that it would identify 2 cases where the instrument can be written down. One of them is that the institution is declared as non-viable by the regulator. Another one is that the institution is receiving government support. And this government support will be done in the terms that would not be acceptable by a private sector investor. So I'm paraphrasing a bit the legal language, but this is the bottom line. So these instruments are supposed to absorb losses at a certain point in time. And that's why, in order to reflect the risks, we decided not to incorporate the external support in the rating of these instruments. What's the impact of that? If you look at one of the instruments that we rated in the GCC, it was issued by a AA- rated bank. The instrument was BB+. And the difference between the bank senior creditworthiness and the instrument creditworthiness should speak about the risk that is being taken by the investors. Now, what do we expect for the Tier 1 instrument market? We think that because of the change in market conditions, we think that some of the issuers with Tier 1 instruments that were coming to a first call date this year, we think that probably some of the issuers will decide not to call the instruments, because when you call the instrument, you need to replace it with an instrument of the same sort of capital content. And given the change in market conditions, the cost of doing that is probably higher these days compared to the time that the instrument were issued, which means that obviously the management of the institution with an instrument coming to its first call date would look at the economics and whether they could finance at competitive rates or not. But in the current environment, most probably many of these instruments will not be called. The other peculiarity of the AT1 market in the GCC is that some of it is subscribed by friendly investors, in the sense that you have a big bank issuing an AT1 instrument that is being subscribed to by some of the large cash-rich corporates of the countries, which happen to sometimes to be related to the government, and the bank is considered as systemically important. So you get the you get the loop. But for some of these instruments, the pricing mechanisms and the decision to call or not would be based on bilateral negotiation with the investors themselves.
Yeah, and I think if I can add to that, Sharaf, I think
please, Karim.
Dr. Damak, I think what we've seen that's been quite interesting is how the market has recovered from the Credit Suisse situation and the Credit Suisse, if you want, AT1 crisis. Effectively, the 17 billion that was written off, we saw very quickly a couple of central banks coming out and making statements, such as the ECB, such as in Singapore, in Hong Kong. We've seen a couple of announcements, and effectively now I think, and this has always been the case, is that there was always a risk that there would be write-downs, and there was always a distinction between how these AT1s are treated jurisdiction by jurisdiction, and it was on the investor to analyze and to determine what's riskier than what. I think what we've seen, obviously there was a shutdown of the market completely, of all subordinated market after the Credit Suisse situation, but we started to see the market reopening slowly again. And we saw a couple of subordinated issuances coming from the insurance space, and up to most recently we saw, okay, it's local currency, the home market, but we saw the SMFG issuing Japanese yen additional tier 1 instruments already. So we are seeing that the market is reopening, and even when we speak to a couple of to investors globally, they are buying in the secondary. They're buying AT1s again. They're being selective. They're doing their homework. They're seeing which ones they want to buy, but they are getting involved. And we saw now UniCredit announcing the call of their additional tier 1 instrument most recently, which is giving more credence now to the fact that this market is not a market that's gone, and it's a market that will remain. And we expect it will be the same for the GCC and for the GCC AT1 Sukuks, or global AT1 Sukuks, but primarily they're coming from the GCC. And we do expect that investors will come to a point where the first deal that comes will be a price discovery process, and they might have to pay up incremental new issue premium. So it will come down to the need on their end, as Dr. Damak said, is there a need? I think that's going to be the first guys that come are going to be guys that need to come, and they will pay up a little bit, and then you'll start seeing a little bit of an equilibrium being struck, whereby, okay, now we know that this is what the pricing is if you want to get this deal done. But at the moment, it's looking more and more that it's a matter of price than it is a matter of access.
This is, I'm more receiving more and more questions on this regard, but let me take this from Nizar, and which is a follow-up question. Some Sukuk structure, and he's talking to Dr. Damak, could have profit and loss sharing characteristics. Can this be considered as a risk aversion factor compared to the characteristic of a conventional fixed income instruments? And I think this comes to what we're talking right now.
Yeah, no, absolutely. These instruments would typically be priced in a manner that would reflect the risks. The last thing you want is an instrument with equity-like characteristics that is being priced as an instrument with fixed income characteristic. And I alluded to that earlier when I spoke about standardization. Today, we have an equilibrium in the market whereby the lawyers, the JLMs, etc., have found a way to satisfy both the Sharia requirement and the investors' requirement. Now, if you look at episode like the implementation of Standard 59 of the AOE fee a couple of years ago in the UAE that has disrupted the market to a large extent, now the lawyers and the investment bankers have found the fix. But if we were to see, for example, mechanisms of revaluation of the underlying assets being embedded in the sukuk, and allowing the scholars to question the presetting of the exercise price for the repayment of the sukuk, then the instrument could become a quasi-equity instrument. And if it becomes a quasi-equity instrument, you have a lot of fixed income investors that would simply decide to walk away. And with the implementation of Standard 59, I mean, from our discussion with some of the investors, some of them were no longer comfortable with the risk because you have a risk of, I mean, some sort of residual exposure to the underlying assets in a sense that, okay, let's say you're a corporate, you issue the 500 billion sukuk supposed to be repaid after 10 years. Now, because of a reason or another, a tangibility event happens, the sukuk becomes immediately repayable. So you have to put on the table $500 million, which you may or may not have as a corporate. And that could increase the risk of default to the investors. So again, we're in an environment where the market has managed to find an equilibrium. If we see a push too hard towards more profit and loss sharing, we need to be prepared to accept that the investors that would be taking the risk would no longer be the fixed income investors.
Thank you, Dr. Mohammed. I think this sum it all for this question. Maybe I'm getting a lot of questions. I'm just trying. Apologies for some of the people that I was not able to communicate. But this is a very interesting question, which is, I think, for Dr. Mohammed and also for Karim coming out from one of the audience. Is there any way a very low-rated country can issue USD Sukuk at a higher rating? Is there any precedent?
Right. At S&P, we have a policy against structuring transactions, so I cannot obviously tell an issuer what to do or what not to do in order to achieve a higher rating. But what I can say is that we have seen transaction, for example, being offered with a guarantee for an entity with low creditworthiness, attracting a guarantee from a more creditworthy entity in order to tap the sukuk market. This is something that we have seen in the past.
Karim, do you want to get into this? Have you encountered this as being one of the global JLMs?
Absolutely. I think that's Dr. Damak hit the nail on the head. I think we've seen the likes of the World Bank, we've seen the likes of other development financial institutions providing guarantees to some on the conventional bond side, to some issuers in order to enhance the rating of their bond and to provide them with market access. Because at some point, if the rating is too low, or if the investors are skeptical about the creditworthiness of the borrower, this type of guarantee removes that question mark. And so, there will be, typically the way it will work is that the borrower will pay a fee to the development financial institution to issue the guarantee, and then it will access, or the bond will price at effectively the level or a little bit higher than the level of the development financial institutions bond, because there will be sort of a guarantee premium, if you want, on top of that. So that is definitely a way that could make sense, and Brother Sharaf, I think your institution could play a big role in this as well.
Thank you, Karim. Thank you, Dr. Mohammed Damak. Thank you, Brother Asari. First of all, finally, I would really to thank all of you for giving the time. I think we've seen a lot of the audience, questions coming in. Unfortunately, we're out of time. at this point of time. Maybe at one point of time, we'll have another webinar talking about guarantee structured, some of the COCO 81, structures that is being in place. But I'm very thankful for you. I know all of you are busy men. You have a lot of your schedule. Thank you for giving the time for Islamic Development Bank. Maybe just before I go, I would like to have a group photo, with you, because this is something that we will really cherish, So if you, Mohsen and maybe Brother Ishraq, are you able to give us a group photo for this webinar?
Thank you very much, Brother Muhammad. We are set. So, gentlemen, on the count of 3, could you please give us a good smile? 1, 2, 3. Thank you very much.
Thank you so much, Brother Ishraq. Thank you for everyone. Thank you for the audience. I've tried my best just to translate the question, and see you.
Thank you, Master.
Thank you.
Assalamu alaikum.
Thank you so much.
Thank you.
Thank you.
So now.